This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performances do not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk. There's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading.
Good Friday afternoon, traders. Scott Norris here, wrapping up the week with you. Today is November 10th, 2006. Well, it was a difficult week for the dollar despite a very strong finish last week on the back of employment data. The greenback was holding on by a thread a week ago when an unexpected drop in the unemployment rate helped the currency spring back in the broad market. Trading was slow at this week's open and the dollar barely made a test of highs from Friday. With a very light economic calendar for the week, it seemed logical to expect at least one more push from dollar bulls in the first 48 hours of trading. The greenback found no such support, however, and Tuesday began what would turn into crippling losses for the currency. Although the dollar did not fall great lengths in most pairs, some critical levels of support have been damaged and even broken. The U.S. dollar index is still trading under its 50, 100, and 200-day moving averages and has now broken all forms of a bullish trend line that may have once existed on the daily charts. This has opened the door for dollar bears to begin plunging and may scare even the toughest of bulls out of at least some existing long dollar positions. The RBA and BOE both hiked interest rates by 25 basis points this week, but the moves were already priced into the market. In fact, expectations were so hawkish heading into the meetings that the underlying currencies both declined after the announcements. The only U.S. data this week was the September trade balance released yesterday morning. The figure was better than economists expected, albeit still an alarming $64.3 billion deficit. The positive spin put on this report helped spark a small bout of dollar buying, but the gains were quickly erased. We then saw most pairs fall flat as the European session wound down. Just then, newswires posted comments from the People's Bank of China that indicated a move away from the U.S. dollar. The bank's governor said that there was a strategy in place to further diversify its $1 trillion reserves outside of dollar-denominated assets. With the greenback already under pressure, traders headed for the exit and the currency fell sharply. While we saw the buck remain under pressure overnight, the currency has maintained some buoyancy through U.S. trading today. Given the market's unpredictable nature in recent months, we could still see next week's open go either way. Now on to the big picture. Traders made a very big deal out of yesterday's comments from the People's Bank of China. The question is whether or not the reaction to sell dollars was warranted. After all, central banks have been expressing interest in diversifying away from the dollar for years. Many argued that the changes would mean very little for the value of the dollar in the big picture. However, now we are talking about the PBOC, which holds the world's largest reserves at $1 trillion, which is expected to double by 2010. While yesterday's comments have already been downplayed by the bank, one still must wonder how its strategy could affect the greenback in the long term. Meanwhile, the dollar is again on the brink of a downward spiral in the technical picture, which could also have long dollar positions ready to unload. The Fed is almost certainly done raising rates, and other central banks around the world are still hiking. U.S. data in the broad spectrum has not been impressive and may not take many more disappointing reports to push the buck over the edge. If fundamental factors continue to tip the scale further in favor of dollar shorts, we should see a very grim outlook for the currency in coming months. Till Monday, have a wonderful weekend. Take care.